6.5%, 6.5%. And that's the number that's keeping thousands of families from buying a home right now. Every week, I hear people say things like, I'll just wait until rates come back down. But what if waiting actually costs you more? What if there are just mortgage strategies available today that you could save thousands of dollars and hardly anybody is talking about them? In today's video, I want to show you how smart buyers are still purchasing home in Miami-Dade and in Broward, even in today's high rate environment. And before we finish, you know whether waiting makes sense or whether buying right now in today's market could actually put you in a stronger financial position. Let's get into it. Hello everyone, welcome back to the channel. If we have never met before, my name is Edwin Cillier and I'm a realtor, real estate educator, and real estate minded investor serving families throughout Miami-Dade and Broward County here in the great state of Florida. My goal isn't simply to help buy houses, that to help you buy a house. That's not just the goal of this channel, but it really to help people just make wise financial decisions that create stability, that build wealth over time, and just give families a peace of mind, because at the end of the day, people matter more than transactions. If that's the kind of content you're looking for, I would love to invite you to become part of this community. Subscribe to this channel, give this video a like, share with someone who's thinking about buying a home and they're just not sure what to do. And throughout the video, I would love to hear from you. Leave me a comment. I want to hear your thoughts because you're the one that matters in this transaction. If mortgage rates were to drop to 5% tomorrow, will you buy a home? Is that the only thing stopping you? I'm genuinely curious to know your thoughts. Now, let's talk real estate. One of the biggest mistakes I see people make is assuming that today's market is simply bad. But real estate markets are rarely that simple. Yes, it's true, mortgage rates today are much higher than we have experienced in our near past, especially what we saw during the pandemic. Back then, many buyers locked in mortgages between 2.5% to 3%, and today, most buyers are looking at rates around 6.5%. And that is a huge difference, you can't deny that. And naturally, once you see the prices and the mortgage and the monthly cost, it does create a sticker shock. Well, here's something many people tend to overlook. The housing market, it didn't stop. People didn't stop getting married. Family didn't stop growing jobs. People still change jobs. People still retire, relocated. People still having children. So therefore, people still need more space, and then some other people need less space. Life keeps moving. And because life keeps moving, people kept buying homes. In fact, first-time home buyers still account for roughly 1/3 of home purchases today. That tells us something important. People are not waiting for the perfect market. They're learning how to buy wisely in the market that they have. And that's exactly what we do in this video, what we're going to talk about in this video. What do you do with the market that you have? Are you still going to wait for a future past that might not come? If interest rates never go down to the 5%, if interest rates never go down to the 4 and 2.5%, does that mean that you will never buy? And yet, other people are doing it. How are they doing it? Let's talk about it. Now, let's bring this a little closer to home. So here in South Florida, we're seeing something that is very interesting. People keep talking about the market crashing. It's going to crash, it's going to crash. But here the market isn't crashing. It is normalizing, but it's not crashing. Inventory has improved compared to the frenzy we experienced a few years ago. Buyers have more choices. Sellers are becoming more flexible. Negotiation opportunities are returning. And that's creating opportunities that simply didn't exist during the bidding wars that we saw in 2021 and 2022. So, while high interest rates have certainly made affordability more challenging, it's true, buyers now they have more leverage. And that leverage they haven't had in years. So, later in this video, I'm going to show you I'm going to show you one strategy, I should say, that's potentially could save you thousands of dollars without asking the seller to reduce the purchase price. So make sure you stay with me to the end. I'm going to show you. You're going to like it. Let's begin with something very simple. Many buyers, they become so focused on one number, the interest rate. And that focus makes them forget just to look at the bigger picture. Think about it this way. Imagine you find your dream home, and this thing is beautiful. It's in the perfect neighborhood, great schools, it's really close to your work, it's in a safe community. Everything that you have been praying for is in this house. Now imagine passing on that home because you're hoping mortgage rates fall by 1%. Maybe they do, maybe they don't. In the meantime, home prices continue to increase. Someone else buys a house. 2 years later, you're still paying rent. That's why experienced investors, they don't just ask, what's today's interest rate? Instead, they ask, does buying today moves you closer to your long-term financial goals? That's a completely different question. And honestly, it's a better question. Of course, let's look at a real example. Let's look at some numbers. Suppose you borrow $400,000 at 3% interest rates. Your monthly principal and interest payment is approximately $1,686. Now, let's use today's market at approximately 6.5%. That exact same loan will cost you $2,530 a month. That's an increase of roughly $850 every single month. There's no point in pretending that that's insignificant. That's a lot of money, that is real, that is substantial, and it's exactly why so many families feel discouraged today. But here's a mistake. Many people stop their analysis right there. They think, higher payments equals bad time to buy. And that's not necessarily true. That's not necessarily the case. Because the interest rate is only one piece of the affordability puzzle. Only one. So over the next few minutes, if you stay with me, I'm going to show you 4 different mortgage strategies that can drastically change that monthly payment without waiting years for rates to fall. The third strategy is one that many buyers never even consider to ask their lenders. And now is the time to ask your lender. Now is the time to negotiate. So far, we have answered an important question. Why people are still buying homes even in today's interest rates. But now comes the question almost every buyer asks, and I get that asked all the time. How do I actually lower my monthly payment? Most people think the only answer is to wait for lower interest rates. But that's only one option. That's what I keep saying. In fact, there are several mortgage strategies that can reduce your monthly payment right now. And some of them are surprisingly underused. Let's look at them one at a time. And trust me, you could use these. When people think about getting a mortgage, they almost automatically picture a 30-year fixed loan. And for many families, that's still an excellent choice. Why? Well, because it makes things predictable. Your principal and interest payments never change. Your rate is locked. You know exactly what to expect every single month, and that's great for most of us. There's tremendous peace of mind in that. But here's something that many buyers just never realize. Just because it's the most common mortgage, it doesn't mean it's automatically the best mortgage for your situation. Your mortgage should fit your life, not the other way around. Just think about, buying shoes. If everybody wore the exact same size, shoe stores will only carry one pair. But that's not how life works. This is completely different, especially when it comes to money. Every family has different goals. Every family has different incomes and different timelines and different risk tolerance. The same is true with mortgages. So let's explore a few alternatives that could help you manage your mortgage payment maybe a little bit different. Option 1, adjustable rate mortgages. Now, the moment I say adjustable rate mortgage, some people immediately think that sounds risky. And truth be told, sometimes it can be, but not always. It's just a tool. And here's why. A 5-1 ARM means your interest rate stays fixed for the first 5 years. After that, you adjust once per year. A 7-1 ARM gives you 7 years before the first adjustments. Why would someone choose that? Because starting interest rate is often lower than a traditional 30-year mortgage. That means lower monthly payments, more cash flow. It's an option. Great affordability during those first several years, whether it's 5 or 7 or whatever arm you're choosing. Well, here's the important question. Who is this best for? Suppose you are a young professional. You know there's a good chance you relocate in 4 to 5 years. Or maybe you marry and you buy something else, or you're just planning to move. Or maybe this is your starter home and you're thinking about moving to something larger soon in the next few years. In those situations, you may sell the home before the rate ever adjusts. If that's your plan, an ARM could save you thousands of dollars. But also important, if you're planning to stay in that home for 15 or 20 years, you need to think about it much more carefully, because no one knows where interest rate will be in several years from now. If they rise significantly, your payment could increase. So an ARM isn't good or bad. Again, it's simply a tool that you can use depending on what your plans are or what your family's plans are. The key is using the right tool for the right situation. But what if you want a lower interest rate? And you want that without taking future risk, without having the risk that the ARMs have. There's another option that many financially different buyers absolutely love. This option could be the one that could work for you. Option 2, the 15-year mortgage. Let's talk about the 15-year mortgage. I know this is not for everybody. It's not for every buyer. But if you are the right buyer, this could be for you. It can be an incredible wealth building tool. Typically, the interest rate is noticeably lower than a 30-year mortgage. That means less interest over the life of the loan. Much, much less. Here's what happens. Because you're paying the loan, you're trying to pay the loan off in half the time, a much larger portion of every payment goes towards the principal instead of the interest. You're building equity at a much faster pace. Imagine 2 neighbors buying identical homes. One chooses a 30-year mortgage, the other chooses a 15-year mortgage. Fast forward 15 years. One neighbor has just finished paying off their home. The other still has 15 years remaining. That's a big difference. That's a huge difference. Now, the trade-off is also obvious. Monthly payments are higher. That's why this strategy works best for buyers with strong, stable incomes who want to maximize long-term wealth instead of minimizing today's payment. It's not about choosing the cheaper payment, it's about choosing the strategy that aligns with your financial goals. Option 3 is temporary rate buydowns. This one has become one of my favorite negotiation tools in today's market. If you have never heard of a 2-1 buydown, then you're not alone. Many buyers have never heard of this either. Yet, it can save thousands of dollars during those first critical years of ownership. How does it work? Suppose that your permanent mortgage rate is 6.5%. With a 2-1 buydown, this is how it's going to work. Your payment is calculated as if your rate were about 4.5% during the first year. Then approximately 5.5% during the second year. Only on the third year does it reach the permanent rate of 6.5%. Why is it so valuable? Because the first couple of years after buying a home are the most expensive years. You're purchasing furniture, you're buying new appliances, maybe you're replacing the ones you have, maybe you're making repairs and landscaping, and you're buying curtains, and unexpected expenses always appear, they're unexpected when you least expect it. So a lower mortgage during those first 2 years create just some breathing room. Now, here's the really exciting part. Many sellers are willing to pay for a buy down instead of reducing the purchase price. Why? Because it's often less expensive for them. That means that you receive immediate monthly savings every single month without necessarily paying more out of pocket. It's one of those true win-win negotiations, and honestly, I think that many buyers miss this opportunity simply because they never ask. Now you know. I would love to hear your thoughts. Before today, have you ever heard of a 2-1 buy down? At least when it comes to your mortgages? Let me know in the comments. I would love to hear from you. I'm just curious because I know that a lot of people care about this topic and many people don't always know about this. I'm always curious to know which topics people need to know more about, so let me know in the comments. Let's bust one of the biggest myths in real estate. You do not need 20% down payment to buy a home. You do not. Some buyers do, which is great if you can, but maybe don't. Many buyers don't. In fact, several loan programs require much less. FHA loans allow qualified buyers to purchase with as little as 3.5% down, not 20%. Many conventional loans allow 3 or 5% down. Again, you don't need 20%. Eligible veterans may qualify for VA financing with 0% down. The important question isn't how much little can I put down? The better question is, which loan program gives me the healthiest financial position after closing? Sometimes putting more money down makes sense. Sometimes keeping additional savings in your emergency fund is the wiser decision. Is your situation at that moment? Later, things can also change. There is no one-size-fits-all answer. There isn't. That's why planning matters so much. What are the plans that you're doing at your house with your family? What are your goals? Let's look at that. That's what's the most important thing. Now, here's something that surprises many people. Florida offers several down payment and closing cost assistance programs. One of the best known is the Florida Hometown Heroes program. Depending on eligibility and availability of funding, qualified buyers may receive assistance with their own down payment and closing costs. That assistance can make the difference between counting rent or continuing to pay rent or finally becoming a homeowner. There are also county programs. There are employer-sponsored programs, and nonprofit organizations offer assistance, many buyers discover because they simply, or they don't discover simply because they don't ask. Ask. They can say yes, they can say no, but now you know. So one conversation with an experienced lender could uncover opportunities with thousands of dollars. That's why I always encourage buyers, never assume you don't qualify. Big mistake. Don't do that. Ask. That's all you need to do. So far, we have talked about choosing the right mortgage. That might save you money. We have discussed different loan products as well. You could save money there as well. We talked about down payment assistance and financing options that many buyers never even consider. Well, here's something I think is just as important. The price you negotiate isn't the only thing that's negotiable. In today's market, buyers or smart buyers aren't just negotiating purchase prices. They're negotiating everything. They're negotiating terms, seller credits, rate buydowns, closing costs, repairs. All those concessions can have as much impact on your monthly payment as your lower purchase price. So think about those things as you're looking at the house. What can you negotiate? So let's take a look at why. One of the biggest changes we have seen over the past couple of years is that buyers are finally getting some negotiating power back. Not everywhere, not on every home, but certainly more than during the frenzy of 2021 and 2022. Back then, many buyers were competing against 10 or 15 other offers. They were waiving inspections. They were, offering above asking price, and sometimes just giving up protections that I would never recommend, like inspections. Today's market is much healthier. It's becoming a conversation again instead of an auction. And trust me, that is good news. It was on difficult times. Great times, but difficult at the exact same time. So let's start with condominiums. The condo inventory has increased significantly across many parts of Florida. That means buyers have more choices, and that's great. And whenever buyers have more choices, then what happens is the negotiation becomes possible because sellers know that buyers have choices. So many condo listings today experience one or more price reductions before finally selling. That doesn't mean every condo is a bargain. It simply means sellers are often more willing to negotiate than they were a few years ago. That's all that means. Here's where strategy truly matters. This is where strategy really comes in. Instead of immediately asking for a huge price reduction, consider asking for something that improves your financial position. For example, you could ask the seller to contribute towards your closing costs. That could be huge. Or ask them to fund a temporary rate buy down. That could do more for you long term than a rate reduction. Sometimes that creates a larger monthly benefit than simply lowering the purchase price by the same dollar amount. And that's thinking strategically instead of emotionally. That is thinking outside the box and doing things that you both can win, the seller and the buyer. Now, single family homes are a little different. Inventory is generally tighter. Demand remains strong in many neighborhoods. And that means that negotiations require just a little more finesse, right? You're probably not going to submit an unrealistic offer and expect it to be accepted, but that doesn't mean you have no leverage, because you do. And that's why being in a negotiating market is a good thing. One of my favorite opportunities is looking at a home that has been sitting on the market for 30 days or longer. Why? Obviously, because motivation often changes over time. And you don't know where the seller's motivation is, but they're more willing to listen to creative offers as well. The seller who rejected an offer during the first weekend may be much more flexible after 6 weeks. Maybe they have already moved. Maybe they're carrying 2 mortgages and they don't want to do that. Maybe they simply want certainty. Every seller has a story. You don't know what the story is. You might never know, but the best negotiations begin by understanding that story. That's why good realtors ask questions instead of making assumptions. And that is important for you to choose a good realtor to work with. Me, of course. I always remind my clients, negotiation isn't about winning. It's about helping both sides reach an agreement they feel good about. It's not about taking advantage. It's about being fair, and you have to be fair. At least I'm fair. If you want to take advantage, maybe I'm not the one for you. The goal isn't to defeat the seller. The goal is to create a transaction where everyone walks away satisfied. Those are the deals that I close. Those are the deals that really close. But even after negotiating a great deal, many buyers still ask me the same question. Edwin, should I just wait until mortgage rates come down? Again, that's probably the biggest question in today's market. And my answer, it just may surprise you. Before we dive into that, if you have found this information helpful, and I hope you have, will you please do me a quick favor? Please click the like button. It really helps the YouTube share this video with other families who are also trying to make wise financial decisions. And if you're new here, please consider subscribing. I appreciate it ahead of time. It doesn't cost you anything, and it means the world to me. Thank you. Every week, I create educational videos designed to help buyers, homeowners, and investors and sellers just feel better about the market, at least feel better about the understanding the South Florida real estate market. I don't do it with fear. I don't do it with any pressure. Just honest information that hopefully helps you make confident decisions. And if you ever need personalized guidance, you find my contact information in the description below. I'll be honored to help me or my team. I have an extensive team with Keller Williams, all willing to help and back you up to reach your financial goals. We're here for you. So please hit subscribe, hit like. Let's answer the question everybody's asking. This may be the most important section of today's video because I hear this almost every week. It's always been in the conversation for a long time now. Hey, Edwin, should I wait until rates come down? Is this a good time to buy? This question, it always revolves around rate. And my answer is always the same. Maybe. It really depends on your particular situation. Oftentimes I say no, sometimes I say yes, but it's not my situation, it's yours. Not your neighbors, not your other family members, yours. Let's walk through it together so you know exactly what I'm talking about. Reason number 1, home prices don't always wait. One assumption many buyers make is this: if mortgage rates fall, everything automatically becomes cheaper. Unfortunately, that's not how real estate works. Lower interest rate often brings more buyers back into the market. What does that mean? More buyers means more competition. More competition often leads to higher prices. We have already seen home values in many South Florida communities continue rising despite today's mortgage rates. Is it going lower in some parts? That's also true, but they'll come back up. In South Florida, that's the trend. So yes, you might eventually secure a lower interest rate if you wait, but could you also end up paying considerably more for the home you're trying to wait? So the savings aren't always as large as people expect. Reason number 2, equity doesn't wait either. Let's talk about something that renters never receive. If you're renting, you're never gonna get it. You're never gonna get this, and that's equity. So every mortgage payment every single one you make includes principal. Little by little, you own a larger percentage of your home. If your home appreciates over time, the equity grows even faster. It's like it's a saving machine that you have. You put in money into this saving machine that you could probably get that money back out at some point. But now compare that with renting. Your monthly payment may provide shelter, which we all need, but it doesn't build ownership. It builds your landlord's wealth. That's why homeownership has historically been one of the most effective long-term wealth building tools available to ordinary families. Become a landlord instead of a tenant. Start thinking about that way. Not because homes always skyrocket in value, that's not always the case, and you have to watch out exactly where you live, but because consistent ownership creates consistent equity. You might not become a landlord, but at least you can put money into your own home and that will pay you back. Reason number 3, you can always refinance. Here's something many first-time home buyers forget. Your house and your mortgage are two completely different things. You hope to keep the house. The mortgage, that can change. If interest rates decline, and if they decline significantly in the future, you may have the opportunity to refinance. So that means that if you can't afford the house now, you can afford it much more later. That means replacing your current mortgage with one carrying a lower interest rate is possible. Now, refinancing isn't free. There are costs involved, and it doesn't make sense every single time for every rate for every buyer. But it does give homeowners flexibility, and you always want that, the power of choice. Think of today's mortgage rate as the vehicle that gets you into the home. It doesn't necessarily have to be the mortgage you keep forever, and that's the beauty about it. Let me give you an example. Let's put some numbers to this. Suppose you purchase a $500,000 home today. That is $500,000. You put down 20%. Great. So you finance $400,000 at 6.5%. Your principal and interest payment is roughly $2,533 a month. Now imagine you decide to wait. 2 years later, interest rates fall to 5%. Sounds great. But during the exact same period, the home increases in price or bidding wars or whatever to $525,000. Now, your loan amount is larger, your down payment is larger, and although your monthly payment is somewhat lower, you have also spent 2 additional years paying rent instead of building equity that should have gone to you. Does that mean buying today is always a better choice? No, absolutely not. But it does show why focusing only on interest rates can be misleading. So, don't be misled. Don't focus just on that. Real estate decisions are never about just one number, and that's what you want to think about. That's what I want you to take from today's video. They're about the entire financial picture. Again, not only about one number. Now, I also want to be responsible here. Sometimes waiting really is the wiser decision. Buying a home is expensive and you have other expenses to it. So if buying today would stretch your finances, leave you with no emergency savings, if it would create constant financial stress, waiting may be exactly the right choice for you. Owning a home should bring stability, not sleepless nights. That's why I always encourage those that are trying to buy a home, any type of buyer, to purchase based on your financial situation, not on what the media says or based it on your readiness, not fear of missing out. The goal isn't simply to become a homeowner. The goal is to become a successful homeowner. Now just own it with peace. So far, we have talked about mortgage rates. We have talked about different loan products. We also talked about negotiating better terms and whether it makes sense to wait or not to wait. But before we finish, I want to leave you with something that's even more important than choosing the right mortgage. It's choosing the right mindset. And you cannot do it to have that. Because a mortgage is a financial tool. That's a favorite word, I think, tool. I say it so many different times. But buying a home is a lifetime decision. And those deserve wisdom. Wisdom does means looking ahead. As many of you know, my faith influenced the way I serve my clients. Not because I believe there's one right financial decision for everyone, but because I believe wisdom should guide every important decision we make, every single one of them. It needs to be part of what you do. Not just make random decisions, but think about it with wisdom. One verse that beautifully captures that principle is Proverbs 27:12. The prudent sees danger and takes refuge, but the simple keeps going and pay the penalty. I appreciate this verse because it reminds us that wisdom isn't about living in fear. It's about preparing for the future. When you're buying a home, being prudent means asking the difficult questions before you sign the contract. It means understanding not just the mortgage payment, but also the property taxes, understanding insurance, maintenance, HOA fees, and how those expenses fit into your long-term budget. It means building an emergency fund instead of stretching every dollar just to get into a house. And it means recognizing that buying the most expensive home, at least the most expensive home you qualify for, isn't always the wisest decision. Sometimes the greatest financial freedom comes from choosing a home that gives you room to save, room to invest, room to give with generosity, and enjoy life without constant financial pressure. And I have said throughout this video, a mortgage is a tool. It's not a goal. The goal is creating a stable home where your family can flourish and where your finances support your lifestyle instead of controlling. When we combine careful planning, wise counsel, and patience, we're much more likely to make decisions that we'll be thankful for years down the road. If you have watched this entire video, thank you. But now, let's turn all that information into actual action. Here are 6 things you can do this week that can put you in a stronger buying position, whether you're choosing to buy next month or next year. Step 1, get pre-approved. Don't start with Zillow. Don't start with open houses. Start with a trusted lender. That's what you really need. A pre-approval tells you what you can actually comfortably afford. It also can help you shop with confidence instead of guessing. And when you find the right home, you're ready to move quickly. Step 2, compare multiple loan options. Don't automatically choose the first mortgage someone shows you. Ask questions. Compare different loan products. Compare monthly payments. Look at ARMs as we talked about. Ask about temporary buydowns. Review 15-year options. Maybe you could afford it. The right mortgage isn't always the most obvious one. Step 3, explore assistance programs. If you're a first-time home buyer, if you're a teacher, if you're a healthcare worker, maybe you are a first responder or another eligible professional, research the assistance programs available in Florida or in your hometown, no matter where you're buying this video from or watching this video from. You may qualify for down payment assistance or closing cost assistance that makes home ownership that much more available. You never know until you ask. You have nothing to lose and a lot to gain, so ask. And step 4 is verify condo financing early. If you're considering a condominium, don't wait until after you have fallen in love with one. verified that the building qualified for your financing before writing an offer. That simple step can save you weeks of frustration and disappointment. You don't want that. Step 5, negotiate everything. Remember, price is not the only item to negotiate. There are things that you can ask about. Ask about seller credits. Ask about closing costs. Ask about rate buydowns, repairs, home warranties. Are there any? Sometimes those concessions, they just help improve your financial position. And sometimes they help it far more than a small reduction in a purchase price. And step 6, just think long term. Long term. Ask yourself this question: can I comfortably afford this home even if life doesn't go exactly as I planned? Leave room in your budget. Leave room for maintenance, for emergencies, to be generous. There's room for that. So important. Leave room for vacations, for retirement. Home ownership should strengthen your financial future, not consume it. The best financial plan always leaves room to breathe. Give yourself some room to breathe. If you remember only one thing from this video, let it be this: don't shop for the lowest interest rates. Shop for the smartest overall strategy. Because two buyers can purchase the exact same home at the exact same price and have a completely different financial outcome. Simply because one understood how to structure the deal better, because knowledge truly, saves money. Think about this. High interest rates can feel intimidating, and they can be. I understand that. I bought at a high interest rate condition as well. Story for another time. But buying home is one of the biggest financial decisions that you will ever make. I bought at 7%. I don't regret it. Remember this: people have purchased homes during 18% mortgage rates. People bought during recessions. People bought during uncertainty. There are many people buying around you that you're wondering how they're doing it if they make less money than you do. That could be your case. Many of those decisions, they turn out to be excellent long-term investments. Why? Because they focus on what they could control: their preparation, their budget, their strategy, their patience. The market would always change. That's a fact. Interest rates will rise, interest rates will fall. But wisdom, preparation, and a good decision making, it never goes out of style. It never really does. Now, if this video helped you better understand mortgage rates and how to buy smart in today's market, you're going to want to watch this next video. One of the biggest reasons people never become homeowners has nothing to do with their credit score or their income or even today's interest rates. It's because they believe that one of the biggest myths in real estate, and that is they believe that you must have 20% down for a down payment in order to buy a home. The truth is, many buyers qualify with far less, but they never discover their options because no one explains them to them clearly. In my next video, we're going to separate fact from fiction as we uncover 10 biggest down payment myths that keep people from buying a home. You learn which myths are true, which ones are costing families years of unnecessary renting, and how understanding your financial options could move you closer to your home ownership goals, much closer and much faster than you ever think. If you ever thought, I just need to save a little more because I can, that's one video you don't want to miss. And if you found value in today's video, please just take a second, a quick second, hit the subscribe button hit the like button if you haven't done already. If you have, thank you. And please share this with someone who's trying to decide whether now is the right time to buy or not. I would also love to hear from you. What's your biggest concern about buying a home in today's market? Leave it in the comments below. I personally read through them, I comment on them, because I help people shape futures. And in my videos, I hope that it helps answer questions that matter to people most. And if you would like to talk more about your own situation, whether you're buying your first home, moving up, maybe you're an investor, or maybe you're thinking about relocating to South Florida, my contact information is in the description below. I will be honored to help you build a strategy that is right for you. Every transaction matters because every people matter. Remember, as always, God loves you, and so do I. I'll see you on that video.